Good afternoon, everyone. I'm Li Xing Gan, Financial Market Strategist Consultant to Exness, and this is your market outlook for the 13th of February 2025. So for today, we will be covering on gold. I'm currently on the Exness web terminal, right? And just a quick recap from where we left off in our previous video on the 7th of February. We did a multi-time frame analysis on gold. We highlighted the key levels on the bigger time frames as well as the 4 hours. Right, so on the weekly time frame, you can see that prices are still holding within that ascending channel, and this uptrend is still intact, right? We see it in the form of high lows and higher highs. But what is worth watching is that price is currently approaching the 78.6% Fibonacci extension, which is this level here. And this was taken by projecting this zigzag movement here and taking the 3 turning points, right? So you can see that by taking these 3 turning points and using the Fibonacci extension tool that we have, which is this one, under trend-based Fib extension. So if we take this and we project it, you can see that this is how we got the 78.6% Fibonacci extension. Right, it's also around the 2,950 resistance zone, right? So this is a level worth watching. So if we were to remove all these markings and go down to the lower time frames, you can see that on the daily, right, this whole daily move that we had to the upside before price paired recent gains, you can see that the daily it's also holding in this ascending channel. Now if we were to move down to the 4 hours time frame, you can see that on the 4 hours, previously when we did the analysis, gold was somewhere here. You can see this area. Right, so we say that if price breaks above the 2,880 level, it could gain upward momentum towards the 2,950 resistance. So you can see that, right? So following a break above this, you can see that this became a resistance turn support zone. So this area that we have over here. It's also a period of consolidation, right? Before we saw a strong break above this zone and then price spiking back to this level to test this region before we saw a rejection. And price continued trending higher. So in this example, we can see that this area was a previous resistance level that price tested multiple times, and then it failed, and eventually it came and tested it again as a demand. Right, so price is still holding above this ascending channel, or within this ascending channel. If I were to just move this slightly, right? If you move back to the daily time frame, you can see that this is the ascending channel. Prices tap into this consolidation, this area of consolidation, as well as the 4 hours demand, and it's currently just hovering between these two levels, right? So the 2,880 support level as well as the 2,950 region. Okay, so these are the key levels for me, right? So it's also interesting to note that gold itself, right, apart from just the fundamentals, the technicals, right, it's also driven by fundamentals. So gold, it's a safe haven. So in times of uncertainty, you can see that especially with all the uncertainty revolving around Trump's trade policies, we are seeing gold pushing higher. But at the same time, right, given that yesterday's US inflation data actually came in hotter than expected, and Jerome Powell had also signaled that the Fed could maintain interest rates at a restrictive level for a longer period of time, but seeing that the upward momentum in gold prices has slowed. And the reason for that is because gold itself is a dollar-denominated asset, right? So when the dollar strengthens or when a Fed adopts a more hawkish stance, then this also means that interest rates could be higher for longer. So it basically stays at a higher level for a longer period of time, and as such, right, it actually reduces the appeal of gold because gold doesn't generate interest, right? So you don't get interest payment from holding gold as compared to, let's say, maybe holding the US dollar, where if you put it into treasury bonds, right, you can get interest from that. So this is why when interest rates are high, gold tend to be less attractive. But as we can see that despite the Fed maintaining rates at restrictive levels, we have seen that run up in gold, right, partly also driven by central bank purchases as well as all the uncertainty from the geopolitical tensions, right? So in this case, you can see where we are right now, right? In terms of going back to the technicals, gold is still holding above that 2,880 support zone. So we could see an area of consolidation here, right? For me, the uptrend still persists, but we also need to bear in mind that given that gold has been at an elevated level, right, and we saw a very extensive run-up since the start of this year or even earlier. And you can see what happened here is that I would want to watch for any signs of shift in market structure. And so right now gold it's still holding above or still forming higher swings in the form of higher lows and higher highs. But at the same time, if gold starts breaking structure, if it starts hovering below this, and I get clear indication that prices are or have the intention to move lower just in forms of lower swings, right? Starting with a break below the last low as well as the 2880 support zone, a breakout of the ascending channel, and this could be an indication that price has the potential to move lower. So right now on gold, right, these are the key levels for me, right? Not much change from here. If we're to go beyond the 2950 level, which is this ascending channel's upper bound, right? And this is the ascending channel that was derived from the weekly. You can see that this ascending channel was found on the weekly time frame, this area over here, right, which also coincides with that 78.6 Fibonacci extension. So if we do see a break above that ascending channel and a strong rally to the upside, right, the next potential resistance for me could be at the 3050 level, right? So this area here, this would also line up with the 100% Fibonacci extension. Now what the 100% Fibonacci extension essentially means is that the extent of the rally that we observe, right, from June all the way to 27th of October, right, this rally that we see here, if we're to project the same rally, let me just take this move, right, and we're to project it from the lows back in on 10th of November, right, that recent retreat or that retracement before price continues another run up, you can see that the 100% extension basically means that the extent of the rally is the same, right? So if price does break above the 2950 level and close above the 78.6 Fibonacci extension, then I think that gold has the potential to move slightly higher to the 3000 level, right? This area here, 3000 is probably a psychological resistance level as well, right? So instead of just a specific level, I'm really looking at a zone, right, between the 3000 to 3050 level, this area here, right? So if price breaks above this 2950 zone. Okay, so that's on gold, right? Another setup that would be interesting to look at would be on dollar index, right? Given how gold has, or it's impacted by the dollar's performance as well, right? You can see that when dollar it's really strong, that's when gold's upward momentum would ease a little, right? And let's take a look at that, right? So if we take a look at dollar index, it's also impacted by other fundamental drivers, for example, like the Fed's stance, right? So if the Fed is more hawkish, or if markets are looking at less rate cuts, right, that tends to support the dollar index. But you can see that this whole run up, right, it could have been priced in as well. Right, so if we take a look at the weekly time frame first on dollar index, you can see that on dollar index, right, generally we are still seeing that push to the upside for that area of consolidation. Right, it's also worth noting that on the weekly time frame, price pushed into this area over here. You can see this zone, right? So this region, it was also a previous support level, right? If you put it in line chart, you can see this clearly. It was a support level that price held, right, before it failed, and it was a very steep drop to the downside. And this is also accompanied by that fair value gap, right? We saw that the gap between three consecutive candles, and you can see that the first candle and the third candle, right, price did not actually the wicks did not overlap. And so currently prices are testing this region on the weekly. It's also interesting to note that this area, right, if I to just project this area of consolidation or this doji before the run up and extend this to the left, you can see that this was actually a strong area of resistance that's been tested several times, right? When we saw the area of consolidation back in 2023 and then again in 2024. And following that, you can see that break and close to the upside here. Right, so for me, this could be an area of demand on the weekly time frame, just given how many times price interacted with this zone, right, and tested as a resistance as well as a support. So this is a potential area of demand for me on the weekly. Right, apart from that, if we were to move down to the daily, right, so key resistance would be this region, as we have highlighted earlier. This was the region that price tested several times. You can see this zone. So let me just extend this. So this area, right, so price is really consolidating within this zone right now, at least on the higher time frames. We're not seeing, or we're seeing that bullish momentum stalled slightly, right? If you move down to the daily time frame, on the daily, it's interesting here because you can see what happened is that price, it's consolidating. There is a range that's trading within, right, this area. So if we to narrow this, you can see that this is a range. Let's see if there is an ascending channel that's being formed. I doubt so. Right here, potentially this area, this region. Okay, this ascending channel, price, it's currently testing this zone. You can see this area here, right? So if I were to zoom in, you can see that this was also another area of consolidation on the daily, that period of consolidation, and a move up. Price did spike and push into this ascending channel's lower bound, as well as the daily period, daily doji that we observed, right, before a strong break to the upside. So this, it's a potential demand area over here, right? So currently we're just seeing the area of consolidation. As of where we are right now on the daily, or even if we were to move down to the 4 hours time frame, right, there is still no indication of a push up or a bounce, right? You're just seeing that consolidation here. So what I would ideally like to see is again that bullish structure coming in play, right, in forms of higher lows and higher highs. Right now it's just price consolidating within this region. There's no clear shift in market structure over here, right? We could see this. You can see that price did break and close above this last high over here, right? Just pushing into this zone. It's also within the lower bound of the ascending channel. So if this support level hold, right, we could see a potential retest of the high again. But what I would like to watch on the 4 hours time frame is a break of this high. You can see that this high has been tested multiple times, right? Even if to stretch this across at about the 108.50 level, you can see that price actually pushed into this zone, right? Once we saw that push up, we saw the break in market structure, price pushed back down, and then retested the high over here before pairing recent gains, right? And you can see that when price spiked up to this level, this was probably driven by the inflation data that we saw yesterday. You can see that this push up that we had over here, this move, right, this area when we saw that price pushing higher, it actually failed to break the last high, right? Which is why I say that prices are still in a period of consolidation, right? So if we were to move back down to the daily time frame, so this is the first resistance level for me, right? This level, a 108.50 level. For the first support level, you can see that this is the region. It also aligns with the lower bound of the ascending channel, right? So I think that we could see a period of consolidation, and if price breaks out of this area, right, between the 108.50 as well as the 107.50, so this region, so if price breaks above this, right, so if price breaks out or closes above the 108.50, we could see potential for a further rise and towards the last high that we had, which is at about the 100 psychological level here, 110 psychological level, sorry, right? So this area over here, right? And if price extends gains beyond the 110 level, this area, right, the next potential resistance, we could use it by projecting this Fibonacci extension, which is the zigzag pattern here, just taking these 3 turning points, right? So if price goes beyond that, then the next potential key level that we have would be at the 100% Fibonacci extension. You can see this level. So let me just highlight 2 things, right? One is the 61.8% and the other is the 100%. You can see the 61.8% Fibonacci extension also aligns with the last swing high that we saw at about 110 region. And then of course beyond that, if price breaks above this, the next resistance or next level that we could possibly watch would be the 111.50 level, this high over here. And conversely, we do see a break and close below the ascending channel as well as below the 107.50 level. This is the demand zone, right? If I were to narrow it down to the 4 hours time frame, you can see that this swing low, the price had tested twice over here, this area, and also swept slightly below the last low, right? This would be the area of demand for me if I were to narrow it to the 4 hours time frame. So this area would be within the higher time frames demand, right, the weekly demand, and it stands at about the 106.20 region. Okay, so it's really more of a zone than a specific level, right? But this key levels for me right now, I think that we are just seeing that consolidation that's within the 107.50, 108.50 region. So if price does rebound above this ascending channel and breaks above the 108.50, we could see potential for further rise, right, towards the 110 level, this area here. But if the ascending channel fails and price closes below this, then the next potential support that price could decline to would be the 106.20 region. You can see that this is also that period of consolidation, a sweep of the low, right, before we see the move up. Okay, so that's it for dollar index technical analysis. Right, so thanks everyone for joining me, and I'll catch you guys again the next time.